Hi, I'm Brooke Zachary with Horizons ETFs. Thank you very much for joining me today. Today I'd like to use the Horizons Seasonal Rotation ETF, ticker symbol HAC. Its weekly commentary is the basis for this market update. So let's jump right in and take a look at the market action last week. Here we can see the S&P 500 was up 0.6%. The Canadian stock market was up 0.8%. Last week, midweek, we did see the ADP employment change report come out, and that came out with 978,000 jobs here that were reported versus an expected 650,000. So we saw quite a strong number for the ADP number, and that got investors' hopes up that they would see a strong number on Friday for the non-farm payroll number. The report did actually come in at 559,000 jobs on Friday versus an expected 650,000 jobs. So the non-farm payroll number fell short of expectations. Investors were actually quite positive on that. That meant the Federal Reserve could be dovish for longer, and we saw the stock market rally quite substantially on Friday. If we take a look at the action last week for HAC, last week HAC was fairly quiet in the markets. And if we take a look at the action last week as far as the different sectors of the market go, we can see here last week was a shortened week for the U.S. market. This is Tuesday here, and we did see a down day on Tuesday for the S&P 500. Now, that didn't tell the whole story. We did see on Tuesday quite a strong day for a lot of the commodity sectors, which really helped to drive the Canadian stock market higher. Wednesday was a fairly nominal day. Thursday was down, and then we did see on Friday, we did see a strong rally on Friday for the S&P 500 as investors once again took console in the weaker non-farm payroll number than expected. If we take a look at the S&P 500, the price action for the S&P 500, you can see here that we had that little peak right here, and that was May 7th, so a month ago. That was the all-time high for the S&P 500. That was at 42.32 on a closing basis. And if you take a look here, we're just shy of that number coming into Monday's open for the S&P 500. The S&P 500 really has been quite flat over the last month and a bit. We've seen some action, obviously, in different sectors of the market. We've seen the cyclical sectors doing quite well, but overall, as an index, it's actually been quite flat. And we have seen the volume actually falling off. Now, in the summertime, you can see volume taper off as well, but we have seen the volume actually drop quite a bit. The RSI has been heading lower, as far as the momentum indicator goes, and the full stochastic oscillator as well. We'd like to see those actually picking up stronger volume for the to help support a higher move for the S&P 500. We're just shy of that all-time high, so let's see if we can get through that. It might be a little difficult unless we see some better volume and some more momentum in the stock market. If we take a look at the sectors of the market last week, here we can see that last week, look at the discretionary sector. Consumer discretionary sector was negative. That was largely because Tesla and Amazon, which make up the two of them almost make up 40% of the index, were both negative last week. Healthcare was also negative last week. Healthcare has actually been doing okay relative to the market last week, and a little bit of a pullback overall. The big winner was the energy sector last week. These are the U.S. sectors, but the energy sector in the U.S. Did quite well, as it did in Canada as well. But interestingly enough, if we take a look, we did see technology actually outperform the market, but not by a huge amount. Industrials were down. Materials were positive and outperformed the market, but not substantially so. The financial sector, which is another cyclical sector, so we look at financials, materials, industrials here. These sectors did not shoot to the moon, basically, on the whole cyclical trade here, which is interesting. We did see the real estate sector, which is a defensive sector, outperform the market. Consumer staples outperform the market, and utilities was positive but underperformed the market. So the concentration really was in the commodity sectors of the market last week. It didn't really translate into really strong outperformance from some of the other sectors or cyclical sectors of the market. So where do we stand right now in the stock markets? Well, we have seen the Canadian stock market and the U.S. stock market actually perform quite well in the first few days of June. That's not to be unexpected on a seasonal basis, as on average, over the long term, we have seen the S&P 500 perform quite well in the first few days of June. But then, on average, over the long term, on a seasonal basis, we have seen some lackluster performance for the S&P 500 for most of the rest of the month, and then perhaps even a downtick towards the end of the month, which could lead to a good buying opportunity coming into Q2 earnings season. Now, that's a little bit ahead of ourselves here at this point. But on average, at this time, we'd expect on a seasonal basis the S&P 500 to be fairly lackluster in performance over the next little while, particularly as we don't have any large drivers expected coming up with the Federal Reserve. Come up with a meeting next week. Investors are going to be holding off a little bit on that perhaps. And the Q1 earnings season is substantially done. And it's going to be difficult for the U.S. government to come up with yet another stimulus package announcement or some sort of spending package so quickly after the proposed 2022 budget that they've just released. So we might see some lackluster performance overall in the markets coming up shortly. And perhaps even we might see a little bit of a pullback as well. Thank you very much for joining me today.